Hello everyone, today is Friday, August 27th, 2021. My name is Evan. Welcome back to our weekly stock market analysis video. If it's your first time tuning into one of these videos, welcome. Thanks so much for joining us. It's nice to have you here. Here's how we break up our analysis. We split things up into two parts. In part one, we look at everything that went on this week in markets. We look at things like correlations and sector performance, equity market performance, credit markets, all the good stuff, and pick apart everything that stands out, looks different, or interesting. And then in part two, we jump into the charts. We look at those longer term trends and try and figure out how to best position ourselves looking ahead. So hopefully that sounds good to you. I do have one quick announcement here, is that next week I will be taking some time off. I'll be taking a full week off from publishing any videos, gonna be doing some traveling. So no videos on the YouTube channel next week. So that includes trade ideas. There'll be no weekend market analysis either. So we will take a week off, be back the following week in our usual schedule. So let's jump into some of the action, some of the headlines from this week. We've got a lot going on. And so we had, Fed Chair Jerome Powell speak at Jackson Hole on Friday, and markets reacted quite favorably. At least the initial reaction has been quite favorably here going into the weekend. We had stocks roaring to new highs across multiple major averages. We saw the US dollar roll over. We saw metals and commodities get bid this week. So there was lots of movement out there and a change of pace, a directional sort of conviction move to the upside, which we'll talk a little bit more about as we sort of go along here. If we take a look at the performance on the week here, I'm looking at the right-hand column. You can see it was green right across the board. The Dow Jones was the laggard, still up 1%. I'll take that. But compared to the Russell 2000, take a look at this now, 5% to the upside. So really screaming to the upside this week in the Russell. Remember, the Russell has been the laggard here. We've been looking at that in its same old trading range, but stubbornly not participating in this market rally. It certainly came alive this week. Russell 2000, Nasdaq 100 doing well, up to over 2%. World stocks also up over 2% on the week. If we take a look at market internals, a big improvement from last week. So if you recall last week, I think that the title of the video was cracks showing, or we talked a lot about some of the cracks underneath in, kind of the mantle, the surface, the foundation of the market. And when we look at this week, we did not see those cracks get bigger. This is why we need to, continually stay up to date with markets and sort of take in new information as it comes. Last week we were on that warning signal. We had the button on the trigger to say, be a little cautious here. There's some warning signs in the market. And when we look at this week, those cracks really started to solidify a bit. They did not get worse. So when I look here at the number of stocks making 52-week highs minus lows, we're back into positive territory. We're not super strong, right? So we're not out of the woods yet, but this is a much better showing than last week in terms of market breadth, participation, and money flow in general. So those warning signs last week really did sort of dissipate or kind of go to the back burner. Bulls in control here, market breadth looking good across all metrics. If we take a look at the 52-week highs minus lows over the past 30 days here, you can see this was last week right in here. See how that slope started to dip back and pull back? And what we were sort of keying off of was seeing if this was a trend that was going to continue into the end of the month. That was the bear case scenario. And look at how we ended this week. We basically reversed and continued to march up here. So this trend, this support remains intact here. And so I look at this market once again as, bears need to prove it. They started to show their teeth a little bit last week, but it was only about 5 days worth of that, and we're back to the same old, routine bull market, stocks at highs, climb the wall of worry. So that's the way we're kind of looking at that. If I take a look at sector performance on the week here, energy getting the really aggressive rebound. Notice, even though it's 7% up this week, it's still slightly down. The only sector that's down over the past 1 month. That goes to show you that it was pretty oversold, or at least had sold off pretty aggressively. So up 7% there. Financials in the second spot, 3.5%. Materials up almost 3%. That smells like a Russell 2000 ingredient mix to me, and that's exactly why the Russell was up over 5%. If we take a look at the downside here, it is exactly what you want to see. Utilities, staples, healthcare, all in the red here, down 1 to 2%. And what do those have in common? They are the most defensive areas of the market. That is where, the real, that's the fake risk on when those are working, right? So when the defensive areas of the market are leading us higher, that generally speaking isn't the best outlook or the best look. So those were at the bottom of the mix. We'll take it. The aggressive sort of risk areas at the top of the list. If we take a look at sectors here, correlations here. The main correlation that is standing out really bright this week is that US dollar inverse correlation to basically everything, but specifically all of these equity markets. When we got to see that dollar start to crack and soften up, we really did see the indices pave way to the upside. All of this, of course, is tied into just outlooks on policy and easing and tapering and everything that the market is looking at there. It all plays together, and you're seeing this relationship now between the dollar, marginally so on the bond market, fixed income market, of course, and what that's looking like for equities as well. So that was a very strong correlation this week on dollar versus equities, and that's inverse correlation. If we take a look at volatility this week, we're coming back down into that sweet zone. This is what I always like to say is that 16 VIX or so. That's a great spot to be while markets are trending higher. That is the climb the wall of worry, and just enough kind of protection buying, but not too much, and no real panic to speak about. I like a 16 VIX while the markets are trading near highs, and that's exactly what we got this week, selling off from about 18.5. And it wasn't long ago before we were trading up to around 24 VIX, which was just a week ago. We saw the VIX are almost around 24, and we're down 40% from that high, from that spike. If we take a look at interest rates and credit here, so yields we saw going up across the market this week. So we did see bond prices coming back down slightly. I mean, we did get a bit of a recovery this week. On Friday at the end, but we still saw yields rising a bit across the curve. So something to keep in mind. Again, I think it's fine if yields rise, but we don't want them rising aggressively or, just totally recklessly in either direction. We're seeing bond markets here in the investment grade high yield bond markets both still supporting moving higher as well. That nice move out of J&K was great to see on Friday as well. If we take a look at dollar and commodities, so the dollar is down almost 1% this week. That's a big move for the dollar. Gold loving it, silver loving it. Bitcoin was down a little sluggish, flat this week, some volatility there. And agriculture, positive against the dollar as well. And then the oil here trade, oil, natural gas up 13% versus the dollar here. Very, very strong move out of WTI and natural gas rebounding after their sell-offs. So the report card this week flips all the way to the other direction. I think we got an F last week in terms of performance out of the market. We got solid check marks across the board here. Everything was working in the bull case. Now, that doesn't mean that we need to be blind bulls right now. There's a lot of excitement behind, some of these stats, but we'll talk about more of this in part 2. But we still, of course, are going to measure levels, and we're going to stay disciplined and make sure, we know when we need to start changing gears. So report card this week was an A. And if we look at the personal allocation, so these are the two trading systems we run here. So we've got our Merlin trading system at the top there, 85% long the market. So again, it started to pull back a little bit. It was kind of feeling out the market for the first time in a real long time, but still, again, you can see just much stronger and continuation of participation to this market. Our short-term tactical system here is basically fully hedged. It's got 6 positions on, but 3 of them are shorts, 3 of them are long. So it's just kind of sitting in the middle here and looking at opportunity on both sides. This is also why it's great to have 2 systems that operate on totally different time frames, because we got one that's reacting in the short term. We have one that cares more about that long term. So that's it for part 1. We'll be back here in just a moment with part 2. One of the most common questions I get from traders after listening to one of our market analysis videos goes a little something like this. Evan, there's so much information. There's so much to consider. Should I be bullish or should I be bearish? And I respect the question because there is always a lot of information to think about, and it's almost always conflicting. That's why these videos are designed to help you objectively frame out markets, but it is on you to execute and pull the trigger based on all the information that we talk about. Now, if you're interested in the stocks and ETFs that I am personally allocating to, then it is our Merlin and Lamerick trading systems. Merlin was built to invest aggressively during healthy market environments and then step aside and get defensive to avoid large corrections. It patiently holds trades for about a month at a time, and it primarily trades growth stocks. You can have a full-time job and easily execute on the signals after the market closes. Our Lamerick trading system is a much shorter term tactical strategy. It holds trades on average for just 4 days, and it trades long and short, which allows it to perform well in more difficult, choppy, and volatile markets, and still no intraday screen watching is required. If you want to learn more about these trading systems, head to thetraderisk.com/systems. There's also a link appearing in the top right hand of your screen. When you sign up for one of our trading systems, you'll be given a login to our website. You can access our nightly trade reports. You'll be put on an email list so you can easily learn more about the trading systems and follow along easily after the market closes. We also have 14-day free trials available. Head to thetraderisk.com/systems. And now let's get back to the show. All right, we are back here with TC2000 Open. We've got our equity market grid showing. So we've got price itself is the white dashed lines you see on all these charts, and we have a custom smart trend filter that we've developed, measures price and volume across time, and we have that applied to all of these charts. Those are the multicolored dots there, and we're looking at a weekly time frame. So when we look here at a weekly time frame and we're looking at our simple sort of trend model here, we can see that we've got no changes to any of our outlooks. The S&P 500 has been in this strong uptrend, just unobstructed here all year long. There hasn't been any yellow warning signs printed on this weekly time frame in terms of trend. If we look at the Nasdaq here, we have had some in the past, but notice it's still green. It's still closing at highs. Life looks good for the bulls. Take a look at this long string of yellow indecision here. This goes to show you how much chop has been setting in here in the Russell 2000, but notice no conviction here has shown itself. There hasn't been a green turn up or a red turn down yet, and we're still waiting for all of that to kind of play itself out. A 5% move, certainly great to see. We're back over the actual smart trend filter level. We're starting to get that angling up. If we get follow through next week, this could finally be the Russell's chance to start to break out here. We're going to need to see the proof, because every time the buyers get back up here, around that 230 area, we get sold off. So let's keep an eye on that into next week. And ACWX here, international stocks, pretty much the same as well. Yellow dot printed, no change to speak of. Now let's go down to a daily chart. Let's get a little bit closer here on some of this action. You can see that the S&P 500 came into this week on the daily chart, on our daily trend outlook, in a yellow sort of warning choppy state, but notice it flipped up on Tuesday of this week. So it didn't last too long here in this yellow state. It resolved higher, and now we have nice trend alignment on the daily and the weekly. Same thing for the Nasdaq. See up here, you can see it turned up on Tuesday. This has been a lot more choppy over recent weeks, but again, no sell signals were produced in our little simple heuristic here, our model on measuring price volume across time. So we are back to bullish here and trend alignment. And then if we look in the bottom left, we see the Russell, which has been a lot choppier and a lot more difficult as we can imagine. And we know that because, again, we look at the weekly chart and we know all this yellow in here is basically going to tell us that it's going to be a headache if we go down to a smaller time frame. And you can see it has been. We've got, this that looks like a Christmas tree with the green and red and everything else. And so we got this flip up on Wednesday, back up into a bullish state after briefly being in a bearish state. And now you can see that angling starting to turn up. That's why we like to use these dots, is because the separation and angling here is what helps us kind of determine trend strength as well. So you're getting this flip up, and this is, certainly constructive developments here for the bulls. And ACWX still kind of a mess in here as well. Pretty sloppy trading over the last, couple of weeks. We're trying to turn up here as well, but we'll need to see a little more conviction in those international markets. Now let's jump into some of the closer analysis here on the US averages. So if we look here at the S&P 500, let's keep things very simple and just kind of measure and map some of these recent levels. So this here, this starting from the bottom of my screen, right around 43.80 or so, this is definitely going to be the elephant in the room here, the bigger intermediate level that we need to see this market stay above. So if you're bullish on I guess intermediate term basis, and I'm calling that, a month or more, this is the area that we really need to see this hold. In the short term, we had some pretty good developments this week because we broke out from this pivot right in here. So you can see we had this high that we put in August 16th. The market ran up here. We started this swift kind of 4-day pullback, bounced off of this area we just talked about, and then kind of stumbled around these new high areas and then launched up. We also had this prior level in here that we were watching as well, which was the top of our range in here around 42.40. So when I look here just at the S&P 500, this is a pretty powerful pattern now when we look at this strong move up on, last Wednesday through Wednesday of this week. Or is this Wednesday? No, this was Thursday of last week. So last Thursday to this Wednesday of this week, this was a strong move in the S&P 500, 3% higher to new all-time highs. We had Thursday of this week, which gave us this quick rejection lower, this kind of, scary looking rollover candle. And now we came back totally rejecting that, closing back at highs here. This to me looks like it is still signaling like it wants higher. It is definitely extended, right? So if we throw on Bollinger Bands here, we're riding back up to the upper Bollinger Band, but this is a sweet spot for markets that like to trend. Even just take a look right in here. When markets really start to move to new all-time highs, they like to ride that upper Bollinger Band and just kind of coast along it. And that's exactly what we're, appear to be setting up for right now. If we go to the weekly chart, again, you can see we're getting back up to, again, frothy levels. The chase is on. Everyone's worried. And this continues to climb sort of that wall of worry. And that's where, again, VIX at 16, breadth that's starting to firm back up, a Russell 2000 that's starting to put itself together. These are all potential signs that this market wants to continue higher. And again, I don't want to be blindly bullish here or be reckless. If you're not involved in the market, if you're just trying to participate now, then you have to be looking at these shorter term levels, or you need to be managing risk. So again, if we start rejecting violently below 44.80, that certainly gets me a little more pessimistic in the short term. And then if we start losing this 43.80 down here, that's definitely the more sign of concern. So we're approximately, 2.8% away from what I would consider the more intermediate term level to be very more cautious about. So that's the read on the S&P 500. If we go to the Russell, so the Russell here has had a heck of a move from the lows. Once again, the bulls came in. Remember, just over a week ago, we were all the way down here around 211 in the Russell 2000, and we were sort of looking at us at the low end of this range. We posted a bunch of charts on social media too, showing down 6 days in a row below the lower Bollinger Band, back into support. Is this time different? That was the question that we posed closed back here. And of course, we can see now, certainly in hindsight, that this time is not different. Buyers showed back up at support and corrected aggressively in a rebound stance from an oversold condition all the way back up to the above the midpoint now of this range. And it looks like the Russell wants to get back up here to these highs in the 230s. So we'll have to see if that actually happens. Strong 5-6 day move now for the Russell, but looks like there's some good momentum in its back right now. Last but not least, the Nasdaq 100 looking very similar to the S&P 500 in the sense that it had this strong aggressive rebound from last Thursday to Wednesday, had this 1 day kind of rejection down here, and then a springboard higher to close out the week at new all-time highs. You can see MACD is trying to lead here. Relevant levels for the Qs that I would be paying attention to. Got so many levels here. Every time I come in, I use a different board on TC2000. So, certainly the most relevant upper level now is this 369, call it 370. This is now where we basically found resistance, where we based out, found, sellers showing up here for a couple of weeks in August and late July. This is the area we want to see the Nasdaq 100 stay above, and that's 370. So again, if you're looking for spots to manage risk, to thoughtfully manage risk in this market that is frothy, that is extended, that continues to run, then these are the types of levels you want to be looking at. 370, nice logical prior resistance, would be a breakout failure if the market started to roll over and break back down. So that's the way I'm looking at markets. Glass certainly half full now. We got markets closing at highs. It's tough to argue with that. Breadth is improving, and we got the Russell that is starting to wake up. So that is the major markets. Let's take a look at a few others. Let's just glance at the VIX here, which is now again back to 16. So it had its most recent sort of sprout of volatility here all the way up to 24. You can see it's already fallen all the way back down to 16, kind of this sweet spot where it's been, finding some pretty good comfort in just resting in this area here for most of the recent past few months. So we'll see if it can just stay down here. Obviously, if it goes spiking back to the upside, that's not going to be a good sign. But if it can stay, under 17 or so, this is a good spot for it. And again, really speaks to what potentially could lead to a nice trending market. If we look at gold, you can see gold had a big move here on Friday. So again, Friday, a couple of things happened. We obviously had Jerome Powell. We had the more specific outlook that he was sort of shedding light on. We had the dollar though rolling over, and so the dollar was closing down by about 0.5% here on Friday, and that certainly helped with things like gold, which is something that benefits from a weaker dollar. Up at 1.5%. Longer term, gold, we've been talking about this thing is still pretty messy. It is, kind of firming up here once again, but it's been a messy trade. So, breakouts have been failing, and it's kind of been buy low, sell high in terms of the range bound behavior. Silver, kind of the same thing. I mean, this has been much weaker, but take a look at the big volume that came in on Friday. Take a look at the fact that it's trying to push up now, close at new multi-week highs. So silver, gold, trying to get its act together. And those are some things you could pay attention to on this heavy volume at this potential turning point. We also had oil, which was a big story this week. So oil was up over 11, almost 11%. Take a look at this weekly action here. So we had a 8.5% down week last week. Then we started this week up with a big gap higher, and then we just continued to rip all week long. So we've got oil suddenly back in the mix here, and that's, again, helping fuel energy stocks and some of those more industrials, metals and mining stocks that are all starting to come together and work right now in this type of environment. We also have natural gas, which is pushing to new highs here on the year. So we had lots of, we got this area in here, which was, what we're looking at is to be potentially pretty stiff resistance up here at this cluster, and you can see we're starting to lift up now. Good volume breakout happening here. So this trade on natural gas, this momentum, this trend looks like it's getting going again here to the upside, wants to continue, wants higher prices. So that looks pretty good there for the bull case as well. Before we look at some of the sector stuff, I did want to take a quick look at the sector grid. I haven't shown this recently. It's a very busy chart, but let's actually just go to a daily chart. So these are all the sectors, all the spider ETF sectors here. And what you'll basically notice is that all sectors this week, except for a couple, which we'll point out in a minute, improved we saw improvement this week. I mean, it makes sense. We just went through all the things that were bullish and happening this week. But when you sort of break it down to a sector level, we saw lots of transitions here. So things that were in the yellow dot from our smart trend filter perspective start to rotate up into a green signal. So we saw, tech happen, communication services happen. Didn't see discretionary happen, didn't see real estate happen, but we did see, financials, industrials, materials, biotech, healthcare started to work back down late on Friday. And so this was this is the breadth improvement. This is the sector sort of granular grid here on kind of where we stand in terms of another way to sort of look at breadth. All right, let's wrap things up here with sort of the very similar type of analysis here. Let's take a look at the sectors and industries that were notably moving higher this week. So I'm going to expand this view here. Again, I'm not going to go in depth on all of these, so feel free to pause this video and just take a look at the sectors and industries here that are showing up on this list. So we had, and I'm just going to go to a weekly chart to simplify this. So first things first, software applications. Look at this nice breakout here to new multi-week highs. We saw biotech starting to lift up here. Take a look at this nice kind of formation here, rounding kind of support that could be developing in biotech. That looks pretty attractive. Semiconductors closing at highs. Internet content information, nice little bull flag here, kind of resolving higher. Diagnostics and research and healthcare closing at new highs. Medical devices closing at highs. Electronic components closing at highs. Shipping and ports closing at highs. Gambling, not quite highs, but certainly multi-week highs, multi-month highs. So that's working. Semiconductor equipment closing pretty close to highs. Scientific and technical instruments closing at new all-time highs. Insurance starting to break out here. So again, now moving into finance. And we've got food distribution breaking out to, kind of rounding out this bottom here. Definitely a laggard on a relative basis, but still kind of firming up here. Defensive area of the market. See luxury goods trying to break out. See airports, heavy volume coming in. Just getting its close towards this multi-week high, not quite breaking out in a clean fashion yet. Pollution in the industrial section and business equipment. Oh, we got a couple more. Semiconductors breaking out to highs, paper and paper products, computer distribution, and that's it. So all of those breaking out notably or closing high or having some good volume. That's our bullish sector and industry scan that we like to look at. So I'm going to leave it there. Hopefully everyone had a good week trading and a week that kind of put things back into the balance act. We came off a shaky week, so we get a little more information this week on kind of the bulls stepping up here. We'll see if we can hold it down into the end of the month. As a reminder, I will be off the grid for the next week, so I hope everybody enjoys the extra day off on Labor Day and just has a great weekend in general. I'll see you back here in 2 weeks. Thanks as always for tuning in and watching. You can subscribe to our YouTube channel or catch us at thetraderist.com. Have a great weekend, and we'll see you back here in a couple weeks.